Thanks for joining us. I'm Marlon Bowling with you as we look at your ag commodity trade. And we had some updates. We mentioned earlier in the broadcast, these states in the southern plains came out with wheat condition updates, and they have been doing that on their own for the past few weeks. Kansas, Oklahoma, and Texas. Let's take a look at what the numbers were when they came out yesterday afternoon. And each and every state had a decline in their good to excellent rating. Kansas went down 1 point, down to 11% good to excellent. We had Oklahoma coming in at 5% good to excellent. That was down 2 points from last week's 7%. And Texas went back down 3% to 10%. Remember last week they went up 3%, so they're back where they were a couple of weeks ago on their good to excellent rating. Now keep in mind this was taken Sunday. The survey was done Sunday. That was before all the moisture had been assessed as far as what had taken place. Those numbers could be largely different next weekend. We'll have to wait and see, but that is what we have to work with for now. Overnight, we had an overnight export sale of corn, and it was not to your standard buyer. It was to Peru last night. We sold 110,000 tons. It was all earmarked for the current marketing year, so we can add that one to the ledger. Let's go to the trading floor in Chicago and welcome Todd Bubba Horwitz of BubbaTrading.com. And happy Ag Day to you there, Mr. Bubba. I appreciate you being with us here on the first day of spring. All right, looks like the markets are not as negative as they were yesterday, although it looks like they're kind of going in fits and starts here this morning on the grain.
Good morning, Marlon. You know, it's funny because at 8:52 this morning, the grains were higher, and at 8:52 Chicago time, all of a sudden they just fell apart for a little bit. Now they look to be coming back a little bit. Last I looked, corn was up about 50 cents, about a half a buck, about half a cent, and of course, soybeans were up about 5 cents, and wheat was up about 5 cents. So I think that we're seeing now, I think, some bottoming action from where we wanted. We were looking for a pullback when we talked last week. We got that pullback right to where we wanted to see it. So now I think you're seeing a lot of bottoming action, in which I'm buying into this bottom action. I think we're going back higher from here now.
That's something that I posted on my Facebook comments this morning, was that some analysts were saying, I wonder if there'll be some bottom picking on Tuesday. And it looks like there you are right there. It looks like evidence of it already. All right, so let's take a look at our prices, and you can kind of provide some color commentary as we go. Let's look at the corn right now. On the big board, we have the May up a half at 375.5, July up a quarter at 383.5, December down a quarter of a cent at 397.25. Real quickly on the corn here, Todd, have the farmer sales dried up?
You know, I think everything's going to be good here, Marlon. I think 375 was a great area to go ahead and step in, and I think this is where we want to be a buyer. I don't see it going below 370. So if you're willing to take a nickel's worth of risk, I think this is a great spot to step in, because I could see $4 before I think I'm going to see 365. So I'd much rather be in here, and I think this is a great opportunity to step right back in after the little bit of sell-off, which was natural anyways.
On the soybean trade, on the May contract, we're trading 5 3/4 higher at 1028 1/4. July up 5 1/4, and November 3.5 higher at 1026 1/4. On the soybeans, do they have more upside today here or this week?
Oh, I think 1020 was the key number on the downside. That's what we call for. That's what we look for. That's where we went. I think you got a chance to go, again, much higher here as well. Now, again, I don't think we're going up today, this minute, a lot higher, but I think we're going to hold our levels and stair step up, which is what I'd like to see anyways. I want to see a nice, slow, grinding rally that ends up with an explosion to the upside.
On the wheat trade in Chicago wheat right now, you have your May contract 4.5 higher at 455 1/4. July up 4. In Kansas City, we have the May contract now 2 1/4 higher at 472 1/2. July up 2 at 490. So we take away 25 cents and give back only 2. Is that fair, Todd?
Oh, I think, listen, I think 455 is a great place to buy wheat. I don't see it going much below 450 if it does. Again, I'm real bullish the entire grain space. They did exactly what we were looking for, a little bit of a pullback after the big rally. I'm a buyer.
On the cotton trade right now, in the market, we have the May contract now down 2 points at 81.21. However, July, July now 3 higher at 81.55, and December now 3 higher too at 77.32. We'll be back in a moment, and Todd Bubba Horwitz and I will take a look at our livestock trade on a Tuesday when we come back. Well, we're going to come back and take a look at our livestock trade now with Todd Bubba Horwitz, BubbaTrading.com in Chicago. He rejoins us, and as we take a look at the livestock trade, All right, everything went lower yesterday, Todd, on the livestock. Lean hogs were down sharply. We had the feeder cattle down sharply yesterday. Live cattle were down about $1. This morning, just like yesterday, Todd, we opened up a little firmer and then sold off within minutes of the open. Now we have April live cattle down 64. We have June down $1 at 109.15, and that is over $1 off our opening high. Now, if we look at the feeder cattle trade on the feeders this morning, we have March down 65. The April contract 95 lower at 137.25, and it's all downhill from there. All the deferred contracts over $1 lower. So are you surprised to see him going after the cattle market again today?
I'm very surprised, and I'm wrong at the way I thought they would hold. You know, I thought the fats would hold somewhere around 120, 121, 122. They did not. I'm a little bit concerned here now. I'm just wondering to myself, is this have anything to do with the possible tariffs that are going on throughout the steel industry and some other things? Because there's really no reason for this kind of pressure to be on these markets, but they're certainly under pressure, and certainly I'm going to have to exit my positions because I can't sit there and watch it. But this is also the reason that everybody would always want to be hedged if you're an actual owner, if you're a producer. That's why you're always hedged these things, because we just never know. The markets don't announce themselves, but it's certainly getting very ugly, and I'm a little bit concerned that they're going to break. But I would look here, and if they can hold here, there might be a chance. But there is some concern. I'm not as bullish as I once was.
There you go. All right. Now on the Dow Jones Industrial Average, of course, yesterday we had a big sell-off in the Dow. It was down several hundred points. And this morning it has firmed up a little bit here. So with it up about 137 points, the Dow now stands at 24,748. Was yesterday part of the problem on the cattle market? I mean, if that was the case, if it was related to the Dow, like they used to say, that definitely would not be the case today because it's higher. So that can't be weighing on the livestock trade today, can it?
No, I don't think so, Marlon. I think the Dow is an animal all by itself, and
okay.
I think that it's a little bit of a rally. Again, right now, I don't think there's a lot of things that are correlating. You've got a whole bunch of mixed-up things going on with it all comes back to playing with the dollar, which is really what's happening, which the dollar is much higher today.
All right, let's take a look at that. I'm glad you brought that up because earlier we saw where it was about 500 points higher on the U.S. dollar index. And at last check here, we'll pull that up and take a look at the June futures here. Yep, up 510 points at 89.840. So that is a good point there, Todd. On the lean hogs, let's look at the futures there. Right now on the lean hog board in Chicago, April unchanged and May down 22 at 70.40. They're going nowhere fast here.
They're in trouble. I think that's one of the issues. And of course, I thought they were going to hold at 67, and now we're at under 63. This is a bad trade. This looks bad. Again, it'd be hard for me to say to sell them here. And if I owned them, and if I owned the physical, I would not be a seller here. But as a speculator, I'm certainly not going to hold on and wait for them to go much lower than here. Here's about where I'm going to have to get out because I can't take all the pressure. It's just not worth it. I can find a new entry spot to get back in later.
All right. Thanks, Todd. I appreciate it.
Thanks,
Todd
Ron.
Bubba Horwitz is with BubbaTrading.com in Chicago, where there is a whole lot of stuff going on this week.
I think a lot of people, though, are probably happy to see the Dow kind of turning around this morning.
Something for everybody.
All right,
this
thank
week.
you. Markets editor Marlon Bowling.